Okay, so we're on to task 4 in the money management unit of personal finance, and this task is all about different types of tax. Now, you probably know that people get taxed on their income, on their salary, but there are a number of different ways that you get taxed as well, and we're going to learn about them in this task. So the first activity is on what's called capital gains tax. The second activity, which is something you are probably familiar with, is VAT, value added tax. And the third activity is land and buildings transaction tax. And then the fourth activity, we're going to talk about loyalty cards and marketing schemes. So in this first activity, we'll be doing capital gains tax. So what is this capital gains tax? Well, you may want to copy down this definition. Capital gains tax is a tax paid by individuals when they have made a significant profit on something they have sold. Okay, so when you sell something for a significant profit, you have to pay this tax. Okay, it doesn't apply to the sale of the house that you live in, but if you are lucky enough to own, more than one property, then it may apply to the sale of a second home or to other possessions. So if you sell your house, you don't have to pay this. If you sell your house for a big profit, you don't have to pay this type of tax. But if it was a second house, a second property, or something else that you sold for a big profit, you would have to pay this tax. Okay, so it may be beneficial to write down that paragraph there. That's quite important. Capital gains tax is only paid on the profit that you've made. And that is, like a lot of these things, you have a threshold that or an allowance that you won't get charged tax on. Okay, and this threshold usually goes up each year. Okay, so you only get taxed on the profit. So, if you buy something for £10 and sell it for £30, you've made a £20 profit, you would only be charged this tax on that £20 of profit, for example. Okay, but this is only for a given threshold, which is quite high, and you're going to find out what that is in a minute. So that's your first activity, that's your first task here, is to use the internet to find the capital gains tax threshold for the current tax year, which is obviously 2020 to 21. So that's your first thing. What is the threshold for this year? And then also, the second thing you need to figure out is what is the current capital gains tax rates. So that's like what the actual percentage is. So rate, can I just put a thing here? Rate means what is the percentage rate for a higher taxpayer. So that's people with more money. Higher rate taxpayers are people that earn over, say, £50,000 roughly. So that's for people that are better off. What is the capital gains tax rate? So what are the capital gains tax rate for higher rate taxpayers? Okay, so you need to pause the video right now and you need to go away and find out information for these two things. Okay, so I hope you managed to get answers to those two. I was immediately, when I searched this, I was immediately directed to the government website with information on capital gains tax. So that is Usually, if anything to do with tax, the government website is going to be your most reliable source of information. So it said that for the threshold for 2020 to 2021 was £12,300. Okay, so that means, basically what that number means is you can make a profit of up to £12,300 on something before you actually need to pay this tax. So, that is still a huge amount of money to profit to make. So for the majority of things, you will not have to pay this capital gains tax. But in certain situations, you may end up making a large profit on something. If you're very lucky, you will need to pay a tax on it. So what are these capital gains tax rates for higher taxpayers? Okay, so again, the same government website was where I got this information from. It says if you're a higher rate for income tax, for property is the first thing. It's split up. There's two different percentages of these tax. One is for property and one is for non-residential. So basically everything else. So if it is property, like a second home that you make the profit on, then you are charged at a rate of 28% of that profit you have to pay in tax. This is for the higher tax payers, and for non-residential it is 20%. So that is obviously quite a significant amount of that money. If you imagine you've made £100,000 profit on something, say it's not a house, 20% of that gets taken off you in tax. So that would be £20,000 that you lose out on. So yeah, it's quite a significant amount of money there. So now we're going to look at an actual real example. Hopefully this will make a bit more sense when we go into an example. So bit of a calculation to do here. So make sure you have your calculators ready. So it says that Kyle buys a painting for £15. So he buys a painting for £15 in a car boot sale. 3 years later, he finds out that the painting is by a famous artist and he is offered £30,000 for it. Calculate how much capital gains tax Kyle would have to pay if he sold the painting. So obviously he's going to make a big profit on it here. If he sold the painting in the current tax year and he is a higher rate taxpayer. Okay, so first things to work out these problems. The first step is we need to work out the profit that he's actually made on this. Okay, then we need to select the correct rate. So is it for residential, or is it for property, or is it for non-residential? And then we need to calculate the tax. Okay, so first of all, the profit is easy enough to work out. Well, if he sold it for £30,000 and he bought it for £15, we just take the 15 away from 30,000. So can you do that calculation now? You should be able to do that in your heads, or use your calculator. Okay, so that's going to be a profit of £29,985. So basically all of it, just taking away £15 there. Okay, so it is a painting, so that is not a property. So the rate that he'll be charged is not the property rate, it is the non-residential rate. So it's 20%. So what I have to do now is the actual tax that we'll have to pay is 20% of that profit. So it's 20% of the profit. However, what we need to factor in here, first of all, is that we get this threshold allowance, don't we? So that means that we get 12,300 where we don't have to, we don't get taxed on that. Okay, so the first thing we have to do before we do this percentage is it's 29,985, but we have to take away the value of the tax-free amount, 300. So that's going to be 20% of, can you now work that out? What's in that bracket? 29,985 take away 12,300. Okay, so that's 17,685. So that's the amount that, if you like, that's his taxable profit, 17,685. Okay, 29,985, the profit, take away the threshold. I should have said that at the beginning. So now I just need to find 20% of this number. You should be able to do that by now. 20% of something. You showed me the other day that you were capable of doing it. So I'll give you 30 seconds just now to do this calculation. Then we'll see if our answers match.